Good evening. Ira Epstein with your Metal Market Wrap-Up, and this wrap-up is for Monday, the 22nd of April, 2024 at 5:30 a.m. Central Time. Let me start off by wishing all of my Jewish followers a very happy Passover. And remember, this is a 7-day holiday that's celebrated that way in Israel, but in America, it's generally a one-night holiday, which is right now. Some people celebrate through it, but the majority that I know, it's tonight, and it doesn't impact trading normally. Now, you get into the other Jewish holidays, the New Year's, Days of Atonement, that's a whole different ball game that happens. This is not the one where the Jewish people in America typically take off. That's not the case in other parts of the world, so understand how that works. Now, in terms of data for tomorrow, we get the Red Book Group with their retail sales. S&P Global Group's going to come out with the U.S. preliminary. So I like these, the preliminary April manufacturing service sector PMIs. Richmond Fed will update their monthly manufacturing sector index for April as well. New home sales data. I consider that important, all right? I want to see how many are selling. Now, remember, we're looking at big declines in starts and permits. That was important. So you got to keep your eye on all that. And the API numbers will come out at 3:30 tomorrow, and the day after that we'll get more. But the big event of the week is a mixture for everybody of the earnings in the stock market. But the big event for the futures trader, now that it's really going to be the PCE number on Friday. Now, that doesn't mean there's not some central bank action along the way. Keep your eye on Japan because you're going to get some news on that as well. So today we had a rally in the stock market after a wild Friday where the market saw Israel attack Iran. The market went up, especially in the energies, and then collapsed pretty big. And today you continued that as the early part of the day today was about risk premium coming out of the markets. That's the important thing to remember. It is a reason that the gold market is back down to $23.40. It is the reason silver is almost $2 off its highs now. The markets that had built in the premium from Iran and Israel going head-to-head at each other, that ended. They did the tit for tat. That's not to say it can't pick up again. It could. But I don't think either country wants it to. Rather, I think what Iran has immediately sent the message of, because on Sunday, U.S. forces had missiles fired at them in Iraq and Syria by, once again, proxies of Iran. So I applaud that. It means business is back to usual. And Israel, I don't know how much they'll do during the Passover holiday. It's a very different holiday in Israel than it is in the United States. So got to take that into account. After the holiday, I think all bets are off, and I think that what they'll do is get the plan going. If they're going to go in the Rafah, to get the citizens out of the way, if they're going to go in the Rafah. You cannot attack and go after Hamas there without getting the citizens out. The world is all over Israel in many, many ways, for too many of the young children dying, women. That's the problem that they're having. I don't think anybody's saying don't go after the terrorists. They're saying you can't keep killing the innocent people. So deal with that. When you look at these markets, you can see that the dollar down a little bit, but we're down tonight early on in most of the currencies. So the dollar probably gets a little bit of a bid as it tries to get back up to the 106 area, which has been giving the market a little bit of a problem. When you look at the energy markets, they were down a lot more than this early in the morning. They have since come back. You are getting a bid in the bonds and the notes, and this is going to be an evening up week. Everybody wants to see what that PCE number is. Higher for longer. The analysts are all guessing that both on a monthly and yearly basis, it'll be slightly higher, very slight, but higher. If it comes in and surprises, that would be an interesting thing, and you could probably get a jolt in these markets. So as we come over to the gold market, we're getting a little bit of a correction. We've started off with a 3% break. So let's go back here if we could. This is how the market finished last week. And now you're getting your first little break of the week. Don't know if it'll last or not, but you're starting down 2.96%. On the daily chart, you can see how much gold fell. So the gold market today really got hit hard. higher high, lower low, you broke the uptrend. So you had coming into the market. Now, I could show you this. It's not difficult to do at all. This is how the pattern was looking. Higher lows, higher highs coming into today. I thought that the market didn't react right, and I wrote that, and I told people, I said, I can't imagine more premium doesn't come out of these markets. And I was looking, would you take out that low? And when you did, that broke the uptrend, and you're sort of in the middle of nowhere right now. Where do you think this market stopped on the break? Take a look at the 18-day average of closes. You know that I call that the line in the sand. From this point is often where markets decide what they want to do next. When we take a look at the Bollinger Band, well, you stopped running it. Once you go to the sidelines, you got to be leery. Is the market going to go up and take out these highs or revert and make a run to that number? Often it comes with a clue ahead of time from losing the bullish embedded reading. Now, if you've taken my charting courses, you learn about this. You know, I just finished my new full charting course. It's 45 chapters. It's about 4.5 minutes, 4 hours and 30 minutes long. It teaches you the basics of what I'm doing, and then I teach you the specifics by showing it to you each morning in the morning subscriber videos, what's going on, what you're learning, where it's at on the current charts. Can't think of a better way to teach. Current, not going back in history. Oh, take a look at this and how perfect that worked out. Anybody after the fact can do it. What do you do now to teach and show what's happening? And you do it over a 30-day period and people go, I got it. I understand the concepts that you're bringing to me. Well, you get that included in the course. You get the charting software. I'll talk about it at the end here. And a discount, because I just released a new course. Higher high, lower low, right to the number, but you had lost the embedded reading a week ago. And I was telling you, unless this market goes up for a new high, I think it could be a bull trap here. And that's what it turned out to be. Now, does this mean the market's going to fall apart? That's not what I'm saying. You're down to a zone where it has to restructure itself. The gold, silver. Just last week, what were you and I talking about? Let's take this back right here. So this is last Friday. And I said, well, okay, we've made this low. We've got our high low. If it rallies, I don't know if it's going to rally here or not, I'm going to look for the 18-day average then. And if it's going to break down, it's got to take out this low to start another move down. Bingo. And this is where you're at right now. So I wouldn't be surprised if you play here for a little bit against that number as it tries to figure out what to do. And if that happened, what do you think happened in silver? So we come there and look at today, right back to that 18-day average zone. You had lost this embedded reading, again, a week ago, all the way up here. And unless you went up and made new highs, and that's what I said, I think you're going to, somewhere along the line, get back to the 18-day average. Did I know it was today? Of course not. But that was the goal. And the market's hit its goal. It's in a reset mode now, to a degree. This isn't gold. You have lower highs, lower lows. Now, what I always hate is when you have an outside day up. And here's another thing for those of you that take my courses. Do you agree you have an outside day up in silver on Friday? What do I teach? If you take out the low of an outside day in X amount of days, I'm not going to teach it to you here, before you go up through that high, markets often, not the word always, often make a run at the closest Bollinger Band, their main moving average, if it's an outside day up to the downside. Need I say more? That was the goal the moment it was taken out. Stop over that high, and that was the ball game. And you could see how it opened last night, all right? So you can't say, oh, it just opened down here. No, it didn't. Not in any manner. And now the market is in a downtrend until you get back over those highs. It's probably got to do some restructuring. It's now no longer overbought as well, nor is the gold market. In the copper market, you have not lost the embedded reading. A whole different look to this market. Support on the breaks will stay in until the red line closes under 79. So if you're asking me, Ira, I want to buy one of the metals here. On the pullbacks, the copper's still the one at this point, not the platinum. as the platinum market never did embed, but when it took out this particular low, it's gone into what we call a vertical price drop. It just let go. Leave it be. This has been the follower. You heard me say that over and over last week, and I'll stick with that. And in the dollar, rather, you're still bullish as can be. You got the embedded reading. I realize it pulled back a little today. The target still is the upper Bollinger Band with stops. I really don't want to see the market get much under 105.57, but that wouldn't take me out. It's losing the momentum if the stochastic closes under 79. Barring that, no. I still like the long side of the market, but I wanted to participate and start picking itself up. That's what you're going to be counting on. Now, if the PCE number is hot, does that hurt the dollar or should help it? Higher for longer interest rates, I think, helps the dollar in that situation. Now, you heard me talk just a moment ago about my course. And what I teach in the course are the swing lines. I'll teach you step by step how you do them, but it's all included in my charting software. It's in TradingView. You can buy our suite of indicators in there as well. All the moving averages that I use, why I use them, I explain them in detail. I go through stochastics and Bollinger Bands. This isn't the same as the enhanced course after it, but you got to get the basics down to understand the next course that follows this. And then the window envelopes, which you never see here. Window envelopes are super duper duper important. They're the indicator that's hit the most of everything. And it's always a profit-taking tool. It's never an order entry tool. But I teach that, again, in the course so that you get to work with that and you learn how it's all done. So as I said, in the course, I want to include everything that I can to teach you. It's, as I said, 45 video chapters. You look at them, you can review them, you go back and forth. PowerPoints galore that explain all this so you see the basics. Then I take you into actual chart examples, and then I tie it up for you. And how I tie it up, you're going to see charts that look like this, but in the morning, you're not only going to have my charting software to do this with, in the morning, you're going to have all my research, my written and daily, for 30 days. And why? Because I'm going to go through the charts with you. I'm going to show you the swing lines, the moving averages, the window envelopes, why the slow stochastics come in with the Bollinger Band. What do they do? I can't think of anything better to teach than taking you through when you understand this, because your eyes open and you go, look, I get what he's saying. And if you don't, you write me. I'll help you. Believe me, we do help. Most people get this. And this, as I said, is a brand new course. Every chapter is brand new. IraEpstein.com. You can move your cursor to the top here, and you do get a discount because it's the inaugural. I'm launching it now, and then price goes back up. So you probably want to take advantage of that. And the course, by the way, just the value of the charting software for 1 month and my research for all that you're getting would be a total of about $250. It's about half of what the course runs. I'm Ira. You have yourself a good day.